Okay, so welcome to the Technicals with the Traders. Now, the first and foremost, we go through the charts on Mondays. You let the market we let the market sort of settle down on a Monday, primarily with the release of Chinese data, the also the political situations, the G20, Syria. There's so many different situations that come into the market that need to have their time to filter through the initial opening of the Asian market and then the European and North American sessions. So that's the sort of, it's just like flushing the system. Get out the cobwebs, and then we can sort of see what we've got. Now, this really comes back into fine-tuning your process with your technicals. The whole way we show you how to do the technical stuff is, cutting out all the dribble, all the sort of bit of noise that you can actually find in the charts, so you can actually sort of clear up your, your technical sort of aspect of things. So what I want to do is we'll just go through the major currency pairs here and redraw the sort of technical lines that we've got. Now, first and foremost, I would always encourage you to sort of get onto your daily charts and actually start to sort of pinpoint exactly where the big starting lines are. I mean, this one here in the Aussie last week, the general momentum sort of pushed it through this level. I was myself banking on this holding. As you can see, down the bottom here, this is one of the things you'll learn as you go along. The technical aspect itself provides it's a general guide to what's going on. See how this is sort of looked like it was coming up to that 90 level. It goes sideways for a bit and then starts to go up a bit more. So you can't really rely on it to sort of be at the top here. What we can use it as a gauge of general momentum at that point, and it's sort of getting to an over sort of board level. That's something that we would look at, but it definitely doesn't mean that this thing stops and doesn't sort of do this little jink and go higher again. Okay, so that's just something to bear in mind. Now, we've got this sort of major trend line here on the Aussie. These are our two major levels. So then what you need to do is bring it back into the daily, the current market. We can see this trend line here where it's broken through at 1995. That's the major level on the downside. Now, this trend line here will act as support on the if the currency comes back down. Okay, and there's another support line down here as well. So that's the sort of two major levels. Now, if I just sort of drill in a little bit tighter here with the current market, we can actually sort of get a bit of a picture here of what's going on. And this is a pretty aggressive move from the Aussie, from 89 cents up to 92.20. There's been the hardest part about it. There's been a number of external factors impacting or directing it. Some US dollar weakness on the back of economic data, then also the Syrian crisis. You've also got, I thought some pretty benign, if not weak, Australian data. Then there's, so you've got a number of different features. But what we're going to do with technical analysis, it's less about getting an opinion of what's going on. It's about sort of trying to draw these trend lines to find out where the basic pressure points in the market are. Now, what we've got is, this is a very steep trend line, but, it's got credibility. I don't sort of necessarily go off the back of these really steep lines, but at the same time, this trend line does have a fair amount of credibility. If I'm sort of looking at the trend lines themselves, we've got the sort of starting point here. These ones here are like close enough, so you'd sort of count it as 2, 3 around this point, say 4, and we're coming up to this sort of key level here. You can be pretty sure that most people would draw that trend line. And this is what we're trying to do with the technical analysis. It's actually really fine-tune the process to isolate what is everyone else looking at. And it's almost to the point, if I just keep going in and out here, you probably can't help but actually draw that trend line in. And that's actually not a bad feature for the actual move, even though it's a very, very steep trend line, very short-term strength. It has actually sort of held in there, and traders will be sort of using it to go long against or to go short against if it breaks through that line. So there are your sort of major levels here. On the rest of the top side, there's nothing else on the major top side levels. So this line itself takes on a sort of key significance for the current situation. Now, what we do have in the background is the lingering political situation with Syria. I know Obama wants to go in. The Russians are sort of saying, well, they're going to help Syria if there's no UN Security Council approval. those sorts of things. That could impact all the currencies and both ways. It'd be all over the place. Trying to isolate the opportunity. We did see here yesterday on the open the Aussie dollar sort of kick in and gap on the back of some strong Chinese data. Now we've got some Chinese data. I think it's actually due out not too long. Let me just double check that. I thought it was actually at 11:30. So we've got some more Chinese data out. This could be the catalyst for a move back down in the currencies, especially when you consider. So let me just get that 10:39. Yeah, it's later the 3:30 this afternoon. That's when it's supposed to come out. So just bear in mind the Chinese actually don't mind releasing their data strongly. Now, the back of the Chinese data on the weekend, strong trade numbers, or much stronger than expected. The showed that there were some signs of life in the Chinese export market. That's their whole industry, exporting. So, you know, equities rallied last night, still on the back of that lingering story. Goes to show me that the market is desperate for some information. You know, and if they're desperate for some information, well, then that makes this data quite important. If it's strong today, then we may see another move higher. If it's weak, well, then we may see the current moves come off again. So this is the either up or down here, and it's going to be around this sort of critical point where things are going to get sort of tricky. It's around that sort of 92. If I just sort of line that up, you want to sort of make sure you get these numbers exact. So we're looking at sort of 92, sort of 15 is the level. 92, 15, 16 is the current level. That's the sort of level we're looking for. So we're looking for extreme weakness in the Chinese data. You'd expect the currency to fall and gain momentum through that trend line. Okay, so that's the Aussie dollar. Now with the euro, we saw some you know, some solid activity last night, really showing or kicking off the sort of the despair that's been in the European market somewhat. Going back into the daily charts, just go through the same process once again. Get your charts up, isolate what was actually going on here. This is the initial trend line that we have one sort of touch, two, sort of three going into the move down. It's a little bit all over the shop now. I know I've still got it there on the hourly charts and sort of banging away. This is the only trend line that was sort of sitting there. It acts support and resistance as it goes through, but now it's sort of chopped through a number of times. It's got less sort of credibility, especially with these other highs sort of poking through here. Now you got 1, 2, and then it's sort of broken back through. It's, you know, this trend line is pretty much overdone or done, and how many people are going to keep it there? Probably not that many. So what you would be doing at this point is refreshing that trend line to the new current low, and we've got a new support line down the downside. I'd be more inclined to sort of get rid of that and take off that side of things. At the same time, on the top side, we've got a resistance line here. They're sort of two short-term levels. If I just come back and get the drawing tool, you know, this trend line here and this one here are the sort of two shorter time frame ones. What we need to do is really go back in and fine-tune this on the hourly sort of time frame, get back into that 30 days, and we'll see exactly what we've got. Usually, and you can see on these charts, this is a bit of a lesson as well. There's a high degree of margin of error on technical analysis. So by going into your dailies and then coming back into your hourlies, you can actually really fine-tune the actual trend lines to take out the margin of error that you may have with drawing these trend lines. So these are the sort of key levels we've got at the moment. We've got on the downside here, we've got top side 133.09, so say 10, rounded up to the nearest round number, probably the smartest thing to do. And on the downside, there's nothing really down until 131.17, so 130 points away. So what the focus is, you know, we know a lot of the trades go through here with the currency in a general uptrend. The focus is on this point here. Now, this is miles away. Sure, if the currency drops back down here, well, then this one will come into play. But at the moment, it's all around this this level here. So that's what we sort of focus on and work out whether the current fundamental situation warrants us going long or staying short euro. Now, when we generally talk about fundamentals, we talk about numbers, you know, the economic numbers. One of the problems with fundamentals, it also includes geopolitical stuff. and at the moment it's very, very cloudy. I can't really see which way is up or which way is down. What the market is gravitating towards, because there's so much fickle or ambiguity with regards to the geopolitical situation, we do have the pure numbers. They're actually jumping on numbers that generally aren't necessarily usually that high impacted. The Syntex investor confidence numbers last night, it was a huge turnaround in the number, and it just goes to show, even if it's a number is sort of a minor impacting event, there is scope for these things to really impact. You know, we've got to move here from 131 to 75.80 up to 132.80, a good 100-point move on the back of some data that, you know, has been pretty subdued of late, and the market hasn't really taken much notice of it. Once again, the Chinese data on the weekend, the same thing. You know, they're looking for something to drive the currencies, and the European data last night provided that situation. So what you'll be looking at is potentially looking at you know, the upcoming European stuff, and there's not much on the radar. You know, but you know, their general economic numbers are pretty benign, as in they're pretty flat. You know, inflation, everything across the board. What you've generally got to wait for is even Thursday we've got some, well, it's just general European, various Italian numbers, a few French numbers. We've got Draghi speaking on Thursday. He's speaking at the Bank of Latvia's economic conference in Riga. Okay, so so that'll be interesting to see if he's got anything else to say on this. I mean, he's pretty clear last week that he thought the euro had a number of major challenges and that growth was actually going to be delayed. So this move here has caught the market out short, and really, yeah, traders sort of got short on the back of what he said earlier last week, and you can sort of see that move through. Through this level here, so let's turn this down the point on. And so along the top up, you can sort of see this level, the 1, 2, sort of 3 touches here on the trend line here. It held in there, and then finally when it sort of snapped, you know, the damn thing's taken off. So what it goes to show you is, you know, these trend lines, traders do look at them very closely. You can see how the congestion here up against this trend line sort of came into play just because the trend line was there. It breaks through, goes up, comes back, retests, and then shoots higher. So pretty much textbook technical trading on the back of that one. The drive came from the fundamentals, but you've got the technical backdrop. So that's once again why we go through the process of drawing these numbers. Okay, so the major sort of number there on the top side, just to go over it again, is 133 sort of 10. That's what you should be writing down on your trade journal, getting ready for a move. So you know exactly what happens when it gets there. Now, just coming back to the dollar yen, I've got the Ichimoku cloud up on this one. Let me just give it here. Now, there's been some wild activity on the yen. One of the sort of key trading opportunities, if I just come in a bit closer, you've got this top here in the yen, starting from the very high up here. 1, 2, 3, at least 4 touches. This line here was of major importance to us. At the same time, it's breaking back into the cloud where you'll see a lot of stop losses triggered. It actually did sort of lead to the major move higher in dollar yen. So then you've seen a massive move down here in the cloud. The bottom of the cloud's held in there. Now we're back above. It's been pretty volatile. It's basically what you can see. But there's one clear opportunity there, and it's back down here. Now, these opportunities aren't there every day. Fine-tuning your technical analysis will enable you to isolate the best trading opportunities. So bringing that into an hourly perspective, and I'll bring it into a shorter time frame. What we've got is, this is what you have to sort of focus in on, what the rest of the world is looking at and what the Japanese traders are looking at. Okay, so we've got a trend line here going up. You can see how well it's behaved and performed. You know, we've got a number of touches here. I'm talking about this trend line here. It's come to the critical point, as per usual. Currency breaks through, comes back, retests, and then falls. Okay, if you don't have the Ichimoku cloud, it doesn't matter. You know, you're still on that trade. Why we do incorporate it is primarily to sort of work out exactly what the Japanese people are looking at as well, or the Japanese traders. You can see here it's sort of stopped at the first level of the cloud. That's quite interesting to note. And then it's then at the bottom of the cloud, it's tried to get through, jostled away here, like a barroom brawl area, and once it's gone through the bottom of the cloud, it's dropped. Okay, that's another trigger point that you can actually see, particularly in the Asian market itself. And so there's two components to that opportunity: this trend line and the bottom of the cloud. Okay, so there's sort of two entry levels as such. Now, when we've got the situation is a bit more unique on the weekend. Japan was awarded the Olympics. There's a massive amount of euphoria in the the equity markets. The Nikkei opened up 3% up, and we saw a massive gap in the market here, about 70 points. That really screws the trade up for a few days as the market sort of comes back, sort of lets the initial euphoria of that go. We had the sort of the close to the open there. So we're sort of working away here now. It should start to sort of come back to some sort of normality. And with that, so do our technical drawing levels. So just coming back in, the easiest thing to do is just leave the cloud there while it's particularly during the Asian session, just redraw your trend lines. Okay, so we've got this longer term trend line that it broke, snapped through. You can see how even this, before I actually draw this one, this is the line that was going back some time. It had 4 or 5 touches. You can see how these lines, once they initially break through this level here, it shoots up. This line now, which was acting as resistance, is now acting as support. And on this side of things, the currency hits the level and bounces off it. Okay, so you got to trust the general global rules on technical analysis. It's bounced off the line. Sure, we've had the euphoria of the Olympic announcement, and the currency sort of kept on going higher, but that's actually a pretty significant point. Now, once we do have this point there, that's when we can restart, or we can start drawing again the actual technical line itself. So you come back over to your recent low before. I haven't got snap the point here, I don't think. Right. Just want to make sure they're on their lows and actually at the right level. So we've got these levels here again, and that's the new sort of trend line on the downside. Now, at the same time on the top side, the general progression, you got 1 touch at the top, 2 touches there. That's the new line on the downside. At the same time, I would be adjusting the line here. Oh, so I'll have to go back to that, to the new high as well. That'll give us the new level on the top side. So what we've got is we've got a new level here. Let me just get these levels first. Around this is actually even better. It's 99.99, so just 100 right on the nose. A big, aggressive, psychological number as well. So that's the sort of key number there. Then on the downside, there's nothing really until you get back down towards 98.85. The cloud here at this point is pretty small, so there's not probably going to be much emphasis on it. I'd be concentrating on these bigger trend lines at the top. Now, just to come back, just to fine-tune that line at the top. Whoops. Sorry, so to go out, take the time frame out a bit. Okay, so this is the previous line. Now that we've seen a new high, you adjust the high to the new high, and that's your new trend line. It's pretty simple stuff. So just coming back here to the 30 days, and then you can see exactly up the top here, we've got the bigger level, which has now only had sort of really 2 touches. It's less. It's not as strong as the previous time where it had sort of 4 touches at 100 sort of 10. Okay, so we've got a level here at 100, basically 100.10. In that situation, I'd be favouring the second line. Okay, you don't want to be sort of rushing straight in here. It's only at 1-2 touches. This is the the longest high to the most recent level. Once again, it's pretty weak, but at the same time, it's probably a better focus than the first line. All right, so that's dollar yen. Then coming across to sterling, it's had some interesting moves in the last sort of week or so. Doing the same process again. This is the easiest way to start doing your technicals at the start of the week. It's drawing your trend lines. Have a look at what the key levels were last week, and you can see the sterling. I'll just get rid of the previous data. We saw Sterling come through. We had the big high here initially. Now, if I just go back and actually just go through a bit of trend line progression here, just to sort of, work out where these lines came from. You've got the initial line here. It's been a bit of a tough trade on a few of these instances where Sterling is sort of just broken high, then sort of break back down. Then you get the next move just next door to it where it finally breaks higher, and then we're in the middle of nowhere. Then it sort of comes off. Then you can draw the next trend line, comes up, tests the next trend line, and then comes off, and then finally breaks through it. So this is the normal trend line progression. Where the consistency really pays off, I can just delete some of these lines. If you're looking for a break here on this situation, you don't get it, you get stopped out on the move down. Invariably, most traders pull out and they don't look for the next opportunity. Whereas if you're consistent and you know it's going high, the data's all high, well, it is going to go high, it's going to break at some stage. If you've got good risk-reward ratios, then that's where this comes in. You actually get the trade here moving higher, and you're taking, this is a winning trade. And so then we see it pull back, and it's back in the sort of frame of things. This trend line here is sort of broken back down, and that's where we're already starting to draw this trend line on the downside. And so then we've got the latest sort of high there. Looking at the, sorry, let me just get rid of that drawings there. So this trend line here, once these things are gone, you just actually delete them. Clearly this is the high one, so 2 touches. That will act as support. You don't, at this point, with the currency sort of just right here, I'm not really a big fan of just drawing the trend line like that, even though that was the high on the other day. Let me just make sure that's in the top. Because it's just 1, 2 touches, it doesn't really tell us much. It doesn't tell you much about what's going on. Whereas this trend line here, where it's had sort of 1, 2, then you had the 3rd touch through here, it's going to be more important as support on the downside than a resistance line on the top side. Now, this is where the technical analysis and horses for courses. You can draw this trend line and have it there, but just understand, I'd probably change it to a different colour. And then you can sort of see, well, that's actually the recent high. If anyone's gone short, I don't think many traders will be using that as a trend line to get short against, or well, it's a very sort of fickle level. The more important level is the level on the downside here, where we've got 1, 2, 3 touches here. So the trend line down here around 155, 155. 60, 55 actually, a little bit lower. 155.36 or 40. That's probably that's the key level. Now, one thing that you want to, a lot of people talk about horizontal trend lines themselves. This is where, see how we've got the currency here in the middle of nowhere, and this is where you can, you want to draw, say, some stuff. Just have a look at what, potentially what other people are looking at. Now, there is a high here at 157.51. All right, so I would give this horizontal line from the previous high more credibility than this red trend line. Okay, why? Because it sits out there in the middle of nowhere. It's the point where it stopped previously on a big run up. We have a run up. There's no sort of technical levels there. It's dropped down dramatically from that point. So it does have sort of it stands out like a beacon that because there's no other major technical levels around, they'll look for something to sort of gravitate towards, and I think you can be pretty sure it will be that sort of random high in the middle of nowhere, okay? And what you've got is you've almost got the situation where it's sort of self-fulfilling. You've got this previous high which sort of got close to it and dropped off, so it adds a bit of weight to it. This is one of those horizontal lines where you get the sort of 1, 2, and we've got come out with a 3rd touch. This is where you can isolate the opportunity, and you're thinking, right, well, I know now what they're looking at. They're looking at this horizontal line. This is the level I'm going to use. You're either getting in at this level here, or you're stopping out at that level. So that's your sort of critical level. If you're going short, you'd be using that level as a stop loss. If you're going long on a break, same level. Okay, so you're looking at probably getting long just above 157.60. Perfect. Once you've isolated that, there's nothing more to do. We'll bring it back into hourly time frame just to sort of isolate opportunity to see exactly what's going on. This is the trend line we have here. Up to these levels. Once again, 157.50 on the top side. This is the level on the downside here that I was talking about. 156.73 is the key level on the downside there that you would be focusing on if sterling comes off. And you would expect it to gain momentum if it goes through that level. All right, so we've got 157 sort of 50 on the top side as a level, 156.70 on the downside. That's sterling. All right, so just gone across here briefly to dollar CAD. CAD's always a big player. Unfortunately, its proximity to the US and their similar sort of economies, it does thrash about all over the place. What we should be looking at is these various different charts here. We've got sort of oil here is just getting flogged all over the place on the back of comments about Syria and potential strikes and all these sorts of things. Oil currently has come off, but it's in a very short term. Well, it's not a short term. It just rallied a little bit this morning. As oil rallies, you'd expect CAD to rally and the dollar to come off, which is exactly what's happening. It's sort of okay. You're looking at that, you think, okay, that's in sync. But what we really need to do is isolate the trend lines here to look for these low risk entry levels. Euro CAD as well is probably a better opportunity, and it was last week. There's actually sort of three here. You've got CAD yen sort of gapping on the open, or gapping the other day. Then you've got the opens over here. You've got CAD yen going up with this move in oil itself. That's probably the biggest oil trade. Euro CAD has been behaving very well, even more so than the dollar. Take the dollar out of the situation, it's actually got even better shape. Had a great technical level. We got to this technical, broke back down. It's come back in testing here, and with the price, if we can just get to see oil go higher, Euro CAD will come off, and that's probably the nicest opportunity at the moment because it's got better technical shape as opposed to dollar CAD, which is just sort of just drifting down towards this trend line. Now let me just zoom in here to the actual currency itself. Okay, so we've got the major trend line here on the previous trend lines. You can see exactly what's been happening here. If you get sort of lazy on this, and it's very easy to when the markets aren't giving you much, this is a great trend line. 1, 2, 3 touches, coming up to the 4th touch here. You can see here, if I just delete that bit of drawing and zoom in a touch more, you can see how good this thing here breaks back down, comes back, tests on the next bar, and then collapses. That's perfect. That's exactly what you should see every time. Okay, so the situation there is CAD did behave quite well. It was just an extremely slow trade to get going, and this activity here probably would have been enough to sort of freak a lot of traders out and probably sort of square up. And fair enough. You're sort of long at these levels here. Currency's banging away for a good day and a half, and then it finally sort of gives way. What you can take out of this is actually sort of learn a bit more about what's actually happened here, and it's a situation very similar to sterling, where we have the on the downside. You can see these lows over here where it's sort of held in. There's a bit of congestion. I don't want to get you sort of too caught up in all these different theories on this, but what you have is a general sort of horizontal level here where the currency is actually sort of hung in there. Once it breaks these trend lines over here and sort of starts to sort of maintain things, you're sort of looking at what's going on. You can isolate here in the middle of nowhere. It had some lows where it sort of held in and started going up from here. Well, that's actually maybe something to pay attention to. We've got the low here starting at this point. I mean, you can even take it back further over here to this low here. But you've got the low from this point. It's held in there 1, 2, 3 times here. Then you got this low lining up. And it's not about any sort of theory. It's about where these lines line up, what the market can see, what they draw. Okay, that's all we're trying to do. What's the market drawing? At this situation, the majority of traders look like they had drawn this trend line. If I just get rid of that other one, just distracting you, boom, then you can sort of see you get this low here. It sort of actually stands out even more. And what we can sort of see on the back of this, as the probably more on the back of the oil stuff, it breaks through this trend line, breaks down, comes back, slight retracement, and then that's your major winning trade there. So that's a sort of trend line in amongst all the other trend lines. Don't forget, you can draw any trend line. You can draw it from any 2 points. But what we're trying to do is isolate and locate the 1 or 2 points to start with that the whole market will be drawing. And that's what the key to this is. Now, with this sort of breaking lower, you would expect this sort of trend line to act as resistance on the way back up. At the same time, if it's in the middle of nowhere, then I'd be more inclined to sort of get rid of that trend line and focus on the 2 bigger trend lines on the perimeters. Okay, so on the top side, once again, you've got 105.52. On the downside, you're looking at 103.37. Now, clearly, 103.37 is a lot closer than the top side. This is where we're going to be really focusing. And what do we really look for on that? Probably the oil. See what's going on in oil. What's going on in oil? Well, it's really political. Okay, so that situation may not create a great trading opportunity, but at the same time, if you've got a cross, which is pretty big in Canada in particular, Euro CAD, this may be your go-to and one that you actually keep a closer eye on. If oil comes off further, well then you'd expect Euro CAD to shoot through this level. It gives us a great entry level just above this trend line. If it chops back up higher, well then probably dollar CAD through this level here is your best entry level. But you've got to see, by the time that oil starts to go higher, Euro CAD's probably down here somewhere, and it's sort of in the middle of nowhere, and you miss the opportunity. So isolate the opportunity. If oil comes off, buy Euro CAD. If oil rallies, then probably sell dollar CAD. All right. All right, guys. That's pretty much wraps us up for the technicals with the traders. As you can see, it's a pretty sort of it's simple. You just got to understand what you're trying to do, and you're trying to draw trend lines that you know that everyone else is looking at. That's the sort of secret of this. Okay. Any general questions on that? Basically it's an ongoing learning process. Drawing trend lines, working out their importance, working out, especially those sort of quirky horizontal ones. This is where the sort of really skill of actually being patient and disciplined on your approach really pays dividends. Okay. And just tweaking your trend lines here and there. There's not much more to this. And I'm actually, the good thing about just as a finish off here with oil, don't be afraid to draw trend lines on the commodities, because they do, people can trade these things the same as currencies these days, and they do behave exactly the same way technically as the currency pairs. And you can see exactly where the pressure points are. When they go through, these things kick off. Yeah, so that's one of the different things. That's a good question, Alan. Alan's mentioned there, Brad, I noticed depending on what charting package I use, I get different trend lines. That's actually one of the biggest issues. One of the reasons we have our entry levels where we do is to cover the margin of error. So there's a certain, you can have 5 or 6 points margin of error. If you've got margin of error of about 10 or 15, 20 points, well then you've got some really bad numbers coming through from your brokerage firm or the software you're using. So I'm using Reuters here, which is the general market rates. So I'm very confident they are the good ones. Yeah, Mehmet, no worries, mate. We'll see you tomorrow at the workshop. There'll be plenty more of this. For example, using MT4i, zoom out and get different. Yeah, so that's right. Just be careful with MT4. It depends on what broker you're using, will determine what rates you get. And if they've got a high which is 10 points variant, then all your trend lines are wrong. The only way to do this is try and find a broking service which is giving real rates and not doing shonky things at the highs and lows. No, not really, Tony. Basically, that's part of the workshop, mate. The indicative entry, stop, and exit levels, they come from actually the people who do the workshop actually work this stuff out. What I'm doing in these technicals with the trade is actually showing you how to draw the trend lines. It's not a full education package, unfortunately. Going to the workshop. Well, I mean, actually, we'll have to sort of check with that because I don't know if you're paid to come. I'll check that out. There is a $5,000 entry fee, so we'll see what's going on there. Yeah, okay, that might be a bit of confusion there with City Index. We'll check that out.